So yesterday, the Federal Reserve, led by Jerome Powell, has decided to cut its benchmark interest rate by 25 basis points, which is a quarter of a percentage point. Now, why did the Fed decide to cut interest rates by 25 basis points? Well, it's primarily to support the job market and economic growth, reflecting a shift in the central bank's focus. So with a weakening labor market, job gains have slowed, and officials are concerned about a potential rise in unemployment. The rate cut was a preemptive move to lower borrowing costs for businesses, which should encourage hiring and investment, thereby protecting the job market. The Fed has a dual mandate of maximum employment and price stability. And although inflation remains somewhat elevated above the 2% target, the increase in downside risk to employment have prompted the Fed to prioritize supporting the job market. Also, the Fed is moving interest rate from a restrictive level, which was used to fight high inflation, towards a more neutral level that neither significantly stimulates nor slows the economy. Now, Professor Jeremy Siegel says that the Fed has our back and will lower interest rates in December if needed. Take a listen.
Get some insights on yesterday's Fed rate decision from Jeremy Siegel. He is chief economist at Wisdom Tree. He's also professor emeritus of finance at University of Pennsylvania's Wharton School of Business. And Jeremy, we were speaking earlier today with Roger Ferguson, the former vice chair at the Fed. His take was kind of interesting on this, that first of all, he applauded that Jay Powell very firmly said that this is not a glide path, that the next rate cut may not be happening on this. And he's a little concerned about the potential for stagflation here, too. What's your takeaway?
Well, you're certainly right, Becky. He said not only is a rate cut not a sure thing for the December meeting, he's emphasized by saying far from it. Those words, I think the Dow dropped 150 points in 5 seconds after that. I think my take is that this will slow down the bull market. I don't think it's going to stop the bull market. But they are looking at strength in the economy. And basically saying, that it's not a sure thing. Now, we have 6 weeks. The next meeting is December 10th. I think the next 6 weeks are very important because even though it ends, December 10th is 2 weeks before Christmas, we're going to get a good idea about how the consumer is going to be reacting to a number of tariff increased prices from all the goods that they're going to buy for the holiday season. And we're also going to see whether layoffs from AI accelerate or not. So I think what they're saying is, I want to see that data. And by the way, whether the government opens or not, and I certainly hope by December 10th it's going to be reopened, but I think they're going to have enough data. I think they have enough alternative sources of data to determine whether there is going to be a slowdown of the consumer. The good news is, I think the Fed has our back. They're essentially saying, if we do see a slowdown, we will cut. But if we see the strength that we are seeing right now, we're going to maybe wait another meeting and see what happens in January.
So you said you think that this slows down the bull market but doesn't stop it. Is that because you think that the market doesn't need rate cuts in order to continue to push higher? There's enough happening on the corporate front, on the economic front? Or do you think that eventually the Fed has to say, okay, we're going to give you what you want?
Now, after projecting that their expenses for 2026 will be significantly higher than 2025, Meta stock is currently down over 9% after Wall Street concerns about AI spending. With that said, I have some important levels for you guys to watch on ticker symbol AMD, Advanced Micro Devices, and Meta Platforms, ticker symbol META. Let's begin with AMD, Advanced Micro Devices. So currently AMD is way above its expected move at 210, and based on that, I am currently bearish on the stock, looking for a pullback down to 213, which from current price would be a decline of over 18%. Now, current support is going to be at 258. If buyers cannot keep the stock above 258, then look for a 4% pullback down to 248. And if 248 breaks, then look for a pullback to 239. Below 239, the bear's next target is going to be at 224. And from current price, we are looking at a decline of over 13%. Next is Meta Platforms, ticker symbol META. So currently the stock is running into resistance at 675. If buyers cannot get the stock to close above this level, then look for a 2% pullback down to 650. If 650 breaks, then we're looking at a pullback down to 628. And below 628, the bear's next target to the downside is going to be at 599. And from current price, we are looking at a decline of over 10%. Now to the upside, if buyers can get the stock above 675, then I want you guys to look for a 4% run to 697. If the stock can get above 697, then look for a run to 724. And above 724, the bull's next target is going to be at 749. Overall, to the upside, I do have a price target for Meta at 824. And from current price, we would be looking at a return of over 23%. Alright guys, if you'd like more accurate price predictions, then go ahead and subscribe to the channel. And as always, thanks for watching, and I'll see you guys in the next one.